Herald Van Der Linde is head of Asia Equity Strategy at HSBC. Herald, great to have you with us here. Thank you very much for your time. The big talking point here, in near term at least, of course, is what's happening with the US dollar, which continues to push higher. Lots of debate about how much of this Trump trade, so as to speak, is in the price, or is it really likely to play out in a big way, which means the dollar can head a lot higher from here. What's your sense, Herald?
Yeah, no, the dollar has been strong, and that's because we've seen bond yields move higher. There's a very kind of silver lining for Asian equities in the story, and I get to that. But yeah, he's a big spender. The idea is that they would do more on fiscal spending, that might be inflationary. The markets have therefore said that might mean that the interest rates are not going to come off so quickly in the US. Bond yields moved higher, and that's attractive for the dollar, so the dollar has remained stronger. And in effect, what's happening, the money is flowing back into the US, and that's not so good for Asian equities. But bond yields are, what are they now? 4.3-ish or something like that. So they can move lower over time if these inflationary numbers start to come off, and that could provide nice support. So we've seen the US market doing really good. They will benefit from this as well, but the Asian markets eventually could benefit from this as well. And bond yields haven't really moved higher that much. They've gone, they haven't really passed the 4.5 level-ish. So I think probably most of the strength in the dollar we've seen at the moment, but it might just hover around a little bit longer in anticipation of what the policies are going to be in the US.
Herald, great to have you on the show this morning. Thanks for joining in. So as this, we love the home market trade continues, which is money piling into, mid and small cap US stocks, where does it leave a market like India? Because we have seen a continuous exodus of foreign investors. The selling has continued. The intensity has come down in the last couple of days, but they're still leaving. So what do you expect from here on? Domestic flows are very, very strong in a market like India. But what should we expect into the end of the year?
Good. So I think in the end of the year, what we're going to see is that these bond yields will remain elevated, maybe come off a little bit. That might provide a little bit of support for the whole region. If you then look at India, the story in India is a bit of that the earnings are disappointing. India's been growing very fast over the last 3 or 4 years. Earnings growth well in advance of 20%. And now what we see is actually that it's coming in well below that. I think out of the top of my head, about 60% of the companies that came through the reporting season have actually not met the analyst earnings estimates. So there's a bit of a reset in Indian earnings for a variety of reasons, right? There's a bit of margin squeeze here and there in the banking systems, on the consumer names you've talked about, and these sort of things. So that lowers the expectation. I think that was the reason why the foreigners left that market. Also, this happened and coincided with things changing in China. So there was some money flowing into China. Now, will this continue into 2025? Probably it will. I think the earnings are being reset, so therefore the valuations need a little bit of a reset. My worry is that if there is a particular worry for Indian equities, is that if the local appetite is starting to come down, because they see these earnings also, that they say, oh, maybe I'm not quite sure what to do. But as long as that remains strong, I don't think we're going to see a hell of a lot of downside in this market. Indeed, if these global bond yields start to fall off again as we go into 2025, I think actually support for markets such as India will come back again. You'll see probably foreign flows coming back again as well.
All right. Hi, Herald. Morning. Always good to hear your thoughts. India has been the outperforming market, but off late, last 2 months or so, China has in fact outperformed India. And there's been a bit of a rotation out of India, Taiwan, out of Korea, presumably into China. Do you think bulk of that rotation has taken place and in the near term, China will still outperform? Or you believe that the structural story is India? You expect, the funds come back here into India because the selling has been the most we've ever seen.
Yeah, so two things here. First of all, if you say structural story, we're looking at a longer run. So we're looking 2, 3, 4 years out. In that sense, India is a structural story. I still believe that, and in China is a trading market. I'm not quite sure where it will go 2 or 3 years' time. It could do very well, but at the moment, let's not assume that. However, the thing is that in China, the worst case scenario that was unfolding until a couple of months ago has now been stopped. What they've done is to make sure that certain payment systems in that economy continue to flow. And that is in itself means that we've probably passed the worst in China. Gradually we see things coming back. Property transactions, for example, are picking up and these sort of things. What that means for China in the moment is that I think the downside risk in that market is limited and the upside risk is pretty still okay. And therefore, in the near term, China looks attractive. In India, it's probably the other way around. With the earnings being disappointing, the downside risk is a bit there, maybe not so much. But if you then go look a little bit beyond that, I think in the long run, India continues to look better.
Well, absolutely. Herald, great speaking with you as always. Thank you very much for joining us, and it's a pleasure. Thanks indeed.